Joining us now, Vivek Arya, Bank of America senior semiconductor analyst. He's bullish on this deal and just raised his price target for AMD to $250 from $200. Vivek, thanks so much for joining us. So what do you make of this deal, and especially what do you make of the concerns that this sort of increases the circularity between OpenAI and all of its vendors and the relationships between all these companies kind of financing each other?
Sure. Good morning. I think before we talk about the suppliers, it's important to understand that OpenAI is eating computing power like Pac-Man. They have 800 million weekly active users, probably getting to 1 billion users by the end of the year. And this is within 3 years of them forming. It took Facebook 8 years to get to 1 billion users. And every one of the users that OpenAI has on their network is consuming tremendous amount of tokens and computing capacity. So the company has to build out a lot of infrastructure, which it is doing with the help of cloud service providers. And for that, it needs to partner with these leading semiconductor companies. Today, NVIDIA is the incumbent. OpenAI has signed deals with Broadcom, and now it has signed this deal with AMD. But it's also important to realize, second point, that OpenAI is going to be one of the many ecosystems that develops in this AI industry, right? There's going to be an ecosystem developed around Meta or Amazon or Google, right? The many different neoclouds that are forming. So this is going to be a broad, diversified industry with chip makers participating, which is why we are not as worried about the circularity of this, because if you look at the total of the deals that OpenAI has signed with NVIDIA and AMD, they will probably end up being less than 5 or 10% of the overall deployment. So no, we are incredibly bullish about this build out. And I think companies like NVIDIA, Broadcom, AMD, and others are very well positioned to take advantage of it.
Yeah, the strategy, to your point, does appear to be as much a land grab as it is about a financial decision. And, your point about Meta and the other ecosystems and the other companies competing in AI, do you think OpenAI has, with all these deals, really made it harder for these other companies to get compute and to get the gigabytes they're going to need for all the power and all the compute power?
Sure. So I do think that the constraint in this industry is not going to be chips. I think it is going to be power. It is going to be the build out of data centers. So I would agree with you there. But many of the companies that are competing against OpenAI, these are public companies. If you look at their capex today, it is still only 70 to 80% of their operating cash flows. So they're very well positioned to fund a lot of their deployment through operating cash flows. Capex intensity is much higher. Used to be 10 to 15%. Now it's closer to 25%. But their cash flow from operations is over 30%. So they're well able to fund this. OpenAI does have to go and look at private sources to fund its build out. But what we find very exciting and fascinating about what's going on in the industry is that OpenAI is the most disruptive of these entities. So as OpenAI goes and disrupts or has the potential to disrupt business models, whether it's in social or search or e-commerce or shopping or other areas, I think that really motivates, it acts as a force multiplier to make others accelerate their deployments, which, as I mentioned, is incredibly positive for the semiconductor industry.